And when you say it'll be concerning, the first thing that comes to mind, I think we were talking about this just before, is Mitch McConnell, right? So they were talking about the second bailout in the U.S. and they talked about municipalities and states, and he was like, no, we're not even going to go there yet. And in fact, I think that they should go bankrupt first before we do anything. And the first thing that came to my mind when he said that is pensions, meaning that these pensioners are going to get into problems because that's the first thing that they'll cut when they have the opportunity in bankruptcy. How does that feed into what you're thinking, and also about the bailouts?
Well, Mitch McConnell has said some silly things. I think Paul Krugman completely destroyed him in his recent article, saying like this is ridiculous at a time when Mitch McConnell and the Republicans gave away these big corporate tax breaks, and through no fault of their own, many states are facing fiscal challenges. You're going to start cutting, and it's not a red state or blue state problem. It's an all-state problem here. Many chronically underfunded pensions are going to suffer, and Mitch McConnell should be careful what he says in terms of the bailouts. Given what's been going on right now in the U.S., I think what's going to happen is you're going to see many public sector unions come out and say, no, we have a right to our public sector pensions. And even in Kentucky, which is Mitch McConnell's state, there was a huge pushback from teachers and other public sector workers when they started cutting defined benefit plans prior to the COVID-19 pandemic hitting them. And, I just don't see how that's a responsible statement from a politician to say. And I come back to this, if you have a catastrophic event where you see a lot of pensions going under, they will be forced to bail them out, regardless of what Mitch McConnell says. There will be a massive bailout of these pensions. I guarantee you this.
You're speaking definitely to the politics of it all, because let me run the how I'm thinking about it from a political perspective by you. When let's use the Fed as an example. The Fed is buying up all sorts of investment grade and even junk bonds for fallen angels. And the whole concept is, look, we don't know if these individual companies were irresponsible before the crisis or not. We're just going to indiscriminately buy to provide liquidity to the market as a whole, because we want to take liquidity onto the national balance sheet because that's what we do as the Fed. But then if you at the same time apply the same logic, you can't really say, we know for a fact you, Chicago, you, Illinois, you were irresponsible, and you, North Dakota, you were responsible. Therefore, we're not going to apply the same logic to you. We're just going to let you indiscriminately go bankrupt. Quite the opposite. Is that the politics that are going to play out in terms of how people are going to see it, bailing out corporations but letting other people on the hook?
Right. So what you described on the economic front is what I call the Japanification of the U.S. economy, which is the Fed basically nationalizing the stock and bond market and allowing a lot of these fallen angel companies to survive when many of them quite frankly, should be bankrupt, right? When you're thinking about it, though, on the state side of things, it's a bit different. The U.S. Federal government can issue its own currency and has the ability to issue a lot of debt, and basically that debt can be monetized by the Fed and the Treasury after. And yes, if we get to the point where many state pensions are on the brink of insolvency, they won't look at, oh, Illinois, you mismanaged your pensions for years, therefore we're not going to give you a bailout. It's going to be a blanket bailout for everyone, unfortunately. And again, the problem with that is you're not addressing structural issues. You're just allowing these pensions to go on mismanaging money. And I should be careful when I say this, not mismanaging money in the sense that, the people that are working at these public pension funds are very, very competent, but there are structural issues that need to be addressed, meaning the state governments have way too much interference in there. They're not run like businesses. They're not run with the best intentions and aligning the interests of members of that plan over the long run with the way the pensions are being managed right now. And this is why they've run into so much trouble. On top of the fact that states have not topped them up, discount rates remain way too high. There's no conditional inflation protection. Some of the benefits were outrageous for these states, like including Illinois. And there's a whole host of structural issues that were never dealt with. But the biggest issue that I keep going back to is governance, because if you don't get the governance right, everything else is irrelevant.